The guy sitting over my right shoulder, this is the last Nasdaq bear. The last one. He bit the bullet yesterday. That was it. After the S&P 500, the Nasdaq, etc., are absolutely skyrocketing and breaking through every sign of resistance that any of the bears could put up. What's going on? Why are markets so bullish? And why is this, in my opinion, set to continue from here? And why am I still long the Nasdaq and the Russell 2000 index? Today, we'll also talk about the dollar. We'll also talk about gold and silver, which are plummeting lower for much of the same reasons as to why the Nasdaq is king today. So don't turn out like this guy. Follow and subscribe to the Trader Nick YouTube channel, where I'll keep you up to date with what we're watching for next in financial markets. Let's get started. So here's a few notes as we get started today, directly from the diary of a stock market bear that no longer is with us. Again, he's right here. The U.S.-China agreement looks like it is set for a finalized signing and shaking hands between the two presidents, President Xi and President Trump. At the same time, it is largely expected that we are going to continue to see stimulus or rate cuts from the Federal Reserve to help kind of continue and bolster the economy. Corporate earnings have also been incredibly solid from the stocks that have reported so far, but we'll get some more information on that as we do have several key big stocks reporting their earnings this week. But so far, things have been really strong. And finally, we have fourth quarter seasonality, which is historically the most bullish period of the year. So for those who are still bearish out there, again, this is something where I learned this a long time ago the hard way. So I know I'm being kind of a dummy, but in all seriousness, there have been times in the past where I wanted nothing more than to counter trend and to call the top and to think I was smarter than everyone else. But what we have found here in 2025 is that momentum is king. People who have been riding momentum have done really well, and people who have been fighting trends and refusing to ride trends have been in a lot of pain. I mean, 2025, look at the Nasdaq reversal that we've seen. This has been one of the most incredible rallies in stocks that we have ever seen in US stock history. Now, does that mean that we're guaranteed to go higher? No. But people have been saying it's got to sell off, it's got to reverse, Trump's going to crash everything for months and months and months. And no, this is not a Trump thing. This is not a permanent bullish Trump situation. This is, if nothing else, a bit of a sentiment thing as well as a macro theme. AI is super strong. Rate cuts are coming. And at the same time, the crowd is still worried about the stock market, giving it more room to continue to rise anyways. Let me show you. Investor sentiment surveys have shown people are still bearish on the stock market. And this fear is giving more fuel to the flame as people capitulate and chase into year's end, as they historically tend to do so. Let me show you. In the fourth quarter of each year for the last 10 years, we've historically seen for most years a rally in stock prices and in cryptocurrencies. This does not guarantee that the stock market is going to go higher, but it tells you that usually it does. Our system, the Edge Finder, has detected this through the technical score, economic score, and sentiment score, as well as the overall rating that it is giving to each of our major currencies, commodities, indices, etc. And the theme for the Edge Finder in the last few weeks has been super bullish indices. Why? Inflation on the big picture is cooling. Rate cuts are coming. Corporate earnings strong. AI is still alive and well and stimulating tons of spending in the economy. So long story short, don't fight the trend. Not just the price trend, but the macro trend. The macro trend is super bullish right now. And you might say, well, Nick, all this bullishness from you is making me nervous. What if we're at the top of the market and you're bullish at the top? Well, there's a good chance that I will be, because calling the top is very difficult. Just ask anyone who's tried to this year. Again, the top calling concept is not something I think is very smart in markets. When markets are trending, when they have momentum, I find it much easier to go with the flow than to fight it. Sure, at some point this market will crash. At some point the AI story will lose some steam and will roll over, and maybe it will even be a violent rollover. This is why we trail stops and we manage risk along the way, so that when it does, we're there to kind of close out, take profits, and prepare for the next move. The smartest thing I found you can do in markets is to not think you're that smart. but to rather follow the trends, both macro and momentum. And that is exactly what the Edge Finder aims to do. It looks at stuff in the economy. It looks at the technical reading, seasonality, price momentum. It looks at sentiment. What's the crowd thinking, and fades that? Or what's the institutional body of players, the big players, the ones with all the money who are, supposedly brilliant or whatever. What are they buying? What are they selling? Well, the Edge Finder looks at all that stuff and it generates a bias for your favorite currency pairs, commodities, and indices. And if you detect a sales pitch, that's because there is one. Except the price today for the Edge Finder is free. We're doing a free week we've started a free week already, but for the latecomers, here's your chance to try out the Edge Finder up until Wednesday of this week completely for free. I'll leave a link in the description down below to where you can sign up and start playing around with the Edge Finder for free between now and Wednesday. And the reason I'm doing this, or we're doing this here at A1, is because we want people to explore the tool prior to us dropping a really big spooky sale coming at the end of this week. So don't miss your chance to try out our stuff completely for free, and don't end up like this guy. Start paying attention to the macro, start paying attention to the momentum, and start taking a hold of your trading by looking at data. You can't do it all in your head. Trust me, I used to do it. It was incredibly time consuming as opposed to having software that can scan stuff for you. For example, check out the new AI scanner on the Edge Finder, which is not only looking through all the data that we have, but also writing up summaries of what it's finding. It's also generating targets for your favorite assets. Of course, we have a huge list that you can select from and get a reading on, and generated output for each one based on the Edge Finder's findings. You can see the Edge Finder is looking at technicals, institutional activity, market sentiment, inflation data, jobs data, economic data, all at your fingertips, all automated. And speaking of some sentiment tools, you can see the overall sentiment here still kind of neutral, and stocks are back to their all-time highs. We also had some news this morning from the Mexican president. We're close to reaching a US deal. However, negotiations are still in progress as the deadline approaches. The point is, and the theme of this year has been, people take the headlines and they absolutely panic. And every single time that they have panicked, it was actually a very good time to buy the dip. And it's no wonder why this stock market rally is absolutely hated. People are furious that the stock market is up so much because, of course, some people let their political biases get in the way of their trading and investing. Now, I'm not saying this because I'm a big Trumpy. People did this under Biden too. People said Biden's going to send us into hyperinflation, and they shorted or sold the stock market because they didn't like the president. It's one of the dumbest things you can do, regardless of whether you like or dislike Trump. And trust me, there's a lot to dislike or like or whatever. People have all their opinions about it. Leave that out of your trading, because it's one of the quickest ways to destroy your trading performance is to let your political emotions or biases get in the way of it. Again, nothing wrong with having an opinion. Maybe you don't like Trump. That's perfectly valid, but don't let that completely dictate your trading decisions, because that would have destroyed your account this year. The dollar index is pretty flat here today, though still holding on to this trend line and looking overall constructive to the upside. But gold is completely melting down here. Let's talk a little bit about the momentum and whether or not it has truly lost its momentum by applying some simple moving averages. What we can see here is that the 20-day moving average, which was prior or this past week a key area for the bulls, seems like we're kind of losing some of that steam, now breaking through, and now our next area of support, I think this is the first obvious area of support that we have on this chart, this 38.2% retracement, which lines up nicely to this previous area where we paused before erupting into all-time highs. But my thought process on gold is I am not bullish or bearish. In fact, if I pull up the Edge Finder's bias on the AI market scanner, I can just search up gold here, and we can see that gold is getting a -1 score. And a large reason for this is that the economic growth signals from the US are still pretty dang strong. GDP growth above trend, retail sales pretty good, manufacturing PMIs beat expectations. And so these strong things for the US economy are giving bearish signals for gold. Remember, gold loves chaos. So from a technical perspective, where does gold go from here? Well, I think a very perfectly normal or healthy thing for gold to do would be to consolidate or even pull back further. So what I mean by that is I think that the gold price is likely to just kind of chop around. I don't know that we're going to have such a directional trend to the downside or to the upside from here for the remainder of 2025, but into 2026, perhaps that will bottom out or we'll find a new directional trend. But sometimes people who watch my channel wonder, how I use the Edge Finder to find setups. And the idea basically is if I get something like a neutral reading, there's just no trade here for me. From a technicals perspective, purely on the higher time frames, I would say we're still bullish and I wouldn't try and short this thing. However, from some of the stuff that's coming out in terms of headlines in regards to US and China coming away with some sort of agreement, I mean, things still look pretty positive in terms of global developments, which is likely the reason we are seeing further downside in gold and silver prices here today. But I don't necessarily think this is, the end of the gold bull move. Remember, we're just back where we were a few weeks ago. It's not like we've cratered back down to, pre-rally moves. I think you'd really have to get concerned with the gold market or the overall trend of the gold market if you were to break something like the 200-day or 100-day moving average. If you saw these levels start to get violated, then yes, maybe we have a downtrend in the works. But right now, big picture, I'd still say dips will likely be bought, in my personal opinion, from a longer term perspective. And I'll take a closer look at gold if we can get some pullbacks into 2026. But seasonally, I would expect sort of a consolidation period, and I'll show you why. Today's video is sponsored by Black Bull Markets. Black Bull is a New Zealand FMA regulated broker offering forex, metals, and crypto trading to their users. With access to over 26,000 tradable instruments, everything from gold, commodities, indices, and more, through their CFD platform, you can trade pretty much anything. They're also backed by one of New Zealand's largest investment management firms and provide institutional grade trading conditions. Black Bull Markets has also earned multiple industry awards for their fast execution speeds and their leverage trading opportunities on their platforms. Traders can access up to 1 to 500 leverage and choose from several platforms like MT4, MT5, CTrader, and TradingView. And something super cool is that they offer no commission on crypto trading, as well as highly competitive spreads, especially on Ethereum. And for a limited time, active traders can receive free TradingView Premium and up to $60 reimbursed every month just for trading with Black Bull. And if you're interested in copy trading, they have an expansive platform just for that. You can see real trading results from other traders in a live environment through their copy trading platform. And when it comes to choosing a great brokerage, choosing one with competitive trading costs in the form of spreads and commissions is very, very important. With their ECN Prime option, you can see spreads from 0.1 pips, which is pretty crazy. And of course, if you're a larger trader, this institutional package looks incredibly competitive, with spreads from 0 pips as well as a $4 round turn commission. Of course, there is a minimum deposit on this, but all three of these look highly competitive compared to the industry. Make sure to use the link in the description down below. We'll leave all the information you need to start trading with Black Bull and start taking your trading to the next level with their amazing platform, their competitive spreads, as well as their copy trading platform if that's something that you're interested in as well. So like I said, make sure to use the link in the description down below to support my channel and also to check out Black Bull to see if it's a right fit for you. Now back to the video. If you're using the Edge Finder for free this week, I would highly encourage you to play around with the annual seasonality tool. It's a relatively new feature, and if I search up gold here, what we can see is the historical expected move for the rest of the year for gold is to actually kind of trend sideways to downwards slightly. So again, we followed seasonal patterns really well this year for gold, following most of the projected moves in regards to this year's volatility. So yeah, I think there is room for gold to kind of go sideways or to go nowhere, maybe chop around, maybe go up a little, go down a little, but I don't really have a strong, decisive prediction or guess as to where I think prices of gold will go next. And one thing that the Edge Finder does, if you look at the top setups page, is it generates a watch list. Now, what you can see here is that I could add in neutral readings, and you could see I could have a ton of things on my screen. But as a user of the Edge Finder and the developer, my primary goal is to actually keep things simple and to generate a watch list that actually has conviction. So I'm looking at things like the Russell, I'm looking at oil prices, which we could take a look at now. You can see oil on the daily chart starting to test this limit or this kind of the limits of this downward resistance point. I would love to see oil prices break through those highs, and then I'm looking for upside from there. And why am I doing that? Well, again, Edge Finder confirmation here tells me, okay, most of our stuff is starting to align bullish. We're really getting some strong score points from from sentiment readings, as well as the trend starting to turn in favor of the bulls. Although economic data is a little bit mixed here, giving us a +0 score towards this overall +6 score, which is a bullish reading on oil. It's very rare that you're going to get everything in the Edge Finder to agree one way or the other, but what the Edge Finder does is it looks for things that have over, plus, or under -5 scores to deem something bullish or bearish. If it has something like a 3 or a -2, the edge finder deems that neutral, meaning there's not really a strong directional bias. But let me clarify something. If the edge finder gives you a bullish reading on the Russell or US oil or Bitcoin, that does not mean you go out and you just buy those things. That's not what the edge finder is intended for. It's not a signal provider. It doesn't tell you buy now or sell now. It tells you, generally speaking, our collection of data favors this direction or no direction. Maybe it's bullish, maybe it's bearish. It's then up to you to use this as a tool, not as a, hand-fed, spoon in your mouth kind of signal solution. It doesn't take into account a lot of entry and exit timing, things like that. That's kind of up to the trader and how you use it. We've done that intentionally because there are traders who look for reversals. There are traders who look for trend following setups, breakouts. There's traders who use the 4-hour chart, the 1-hour chart, the daily chart, the weekly chart. The edge finder is not built for a time frame. It's not built for a specific strategy. It's built to specifically scan our sentiment data, technical data, and economic data to give a generic overview of what that data is suggesting. I use it all the time in my trading and actually prefer it to be loose rather than an entry here, stop loss here, target here, signal provider. That is not what the edge finder does. So let me give you this example with Nasdaq. A couple weeks ago, the Nasdaq sold off into an area of support that I was watching. I ended up taking the trade, putting my stop loss here, and I have since moved my stop loss here, then to here, then now to here. I've trailed my stop loss on this. I use a trailing stop method. I also use a trend following strategy. So the edge finder works for that. But if I was somebody who traded reversals or trend line breaks or something like that, the edge finder wouldn't be very useful for me if it was built for a specific strategy. The edge finder is not. It's built to scan that data. And even though we were getting bullish Nasdaq readings around here, that wasn't an indication to buy Nasdaq at this level. It was saying our factors generally favor bullishness at this time. And so once we got that dip, it gave me the opportunity from my own personal strategy to enter a trade and to manage it accordingly. That's how you use edge finder. It's a confluence factor tool. It is not a buy now, sell here, that sort of thing. It's just not that. And just a reminder, don't miss your chance to try it for free because Wednesday will be the last day that it is free to use for everyone. And just look at that Nasdaq rip in here today. My goodness. VIX is down 2% and the market has pretty much said, okay, super volatile. We don't know what's going on with Trump and President Xi. And completely, once again, the story played out for like the 7th time this year, where people get all flared up about, debates, negotiations, etc. And then it turns out that it was sort of a ploy. And understandably, people are a little frustrated by Trump and his back and forth posts. I totally resonate with that because it's super scary to the market initially. But I think as traders, we kind of have to adapt to the world we're in. And the strategy has been to do the taco trade, which is, maybe a harsh way of expressing it, but Trump always chickens out. Or you could, if you like it, you call it good negotiating skills, whatever you want to call it. Doesn't really matter. The point is, from a trading perspective, the play of the year and of last year and in 2018 and 2019, when you watch President Trump back then doing the same stuff, you take everything he says with a little bit of grain of salt and you don't overreact to it. The market, unfortunately, has drastically overreacted to it time and time again in the last year or so. And just look at this, gold down 3.26%. Silver's down almost 5%. Just a crazy market.